Greetings everyone! I am going to show you on how we conducted our audit simulation in operations auditing. Let's take a look at the interim visit. This composes of two tasks, namely interim visit 1 and interim visit 2. And this is how the interim visit 1 looks like. There you can see a summarized sale process, cash receipts, sale sample documents and such, and most importantly, the internal control questionnaire, in which we will be going to identify, evaluate, and test the internal controls in the sales system. We will be also going to make a list of any weaknesses spotted and suggest some recommendations on how this should be addressed. This is the content of the internal control questionnaire. These questions are designed around the perfect sales system. If the control does not exist, then you take no. The auditor then uses this information to identify weaknesses in the current sales system and relate them to what could go wrong in the accounts. The first set of questions boils down to the concept asking, can only approved customers be included in the sales ledger? We take a no answer only to the concept concluding that credit limits reviewed are every 3 months or where the debtor days exceeds 3 months. This is the second set of questions. We only answer yes to number 2 and 7, agreeing to the concept that all orders are checked against the current sales ledger balance and customers in default will immediately put on stop. The third set of questions is all about the goods dispatched resulting in a customer being invoiced. And we can agree that much on items 7 and 13. The fourth set of questions main concept is asking, are all invoices raised recorded in the sales ledger? We say yes to every question except on number 3. This is the fifth set, and all the questions have been answered by a yes. This is the last set of questions. Some of the queries has been answered by a yes, and some are no. Since we are tasked to plot weaknesses and suggest some recommendations, we have observed 5 weaknesses together with its recommendations on how these loopholes should be addressed. This is the content of Interim Visit 2. There you can see the company conducted interviews, purchase process year in 2021, purchasing sample documents, and the purchase control questionnaire. And this is how it looks like. This is the trade payables. Errors and irregularities includes the following. First, purchases may have been recorded to the wrong account. Second, a liability may have been set up for a fictitious company. Third, the purchase and liability may have been recorded in the wrong accounting period. Fourth, a purchase or liability may have been omitted. And lastly, purchases may have been recorded, but the merchandise may not been received. I will read to you the following questions. Has a purchase requisition be raised for all purchases? Yes. Is the purchase requisition pre-numbered? Yes. Has a purchase order to be raised for all purchases? The answer is yes. Are purchase orders pre-numbered? Yes. Do purchase orders have to be approved? Literally, yes. Are vendors' monthly statements reconciled to the purchase ledger? Yes. Do adjustments to accounts payable require the approval of a responsible official? Yes. Let us continue. Are all vendors' invoices checked for proper pricing, extensions, footings, and terms? No. Does the company ensure that claims for damaged merchandise are processed promptly? Yes. Are unmatched invoices receiving reports and purchase invoices reviewed periodically? The answer is yes. Are supporting documents reviewed by check signers prior to payment? Yes. Are supporting documents stamped cancelled by the check signers? No. Are checks mailed directly by the person signing the check and not returned to the preparers? No. That is all for entering 1 and 2, and I hope you have learned something.